Okay, good evening. My name is Michael Lacey, and I'm here to make a video and to give clarity on how to trade crash and boom with the necessary checklist. Okay, the the last video I made actually explained to a point, and the video right now is going to be a little bit technical. Okay, it's not complicated. I'm going to try as much as possible to make it very simple and easy to understand. Okay, you guys have been asking for checklists, what you need to check out for, all right, before you can trade crash and burn. Now, after this video, God willing, I'm going to do another video exclusively on how you can buy crash and how you can sell boom. Very effective, very effective. You don't need to be scared of the spikes and all that. But if you study this very well, then you can also buy crash and also sell boom. Although it is not advisable if you do not really understand that. Okay, so this one is basically to help you trade crash by selling crash and also buy boom. So let's start from the first one. Okay, now when you go to, let me see if I can view this. Okay, I can view this. Okay, I can view this. Okay, fine. Okay, now let's begin from somewhere. The first thing on the checklist is this: for crash sell, that is a long-term sell, not the one you catch the drops. That is not for me trading. You must learn to trade the pattern. Now, I may not be able to teach you those patterns, okay? But if you are conversant with candlestick patterns, okay, market structures and all of those market formations and all that, it will help you also to detect, while I'm talking about price action and all of that. But if you want to trade crash profitably, okay, with less, risk, then you must trade it as every other indices. Okay, don't necessarily be waiting for the spikes. Okay, because for me, in the long run, it's a pretty waste of time. Just trade a pattern, and then the spikes will fall into places, or the drops in case of a crash. Now, what am I trying to say here is this: checklist for trading crash and burn. For crash sell, all right, you want to place sell, all right. One of the things I want to say here, and please listen carefully, is that you must always locate to sell crash from a resistance zone, all right, from a resistance zone. But the first thing I want you to learn, you must observe, is to observe where is the major trend of this crash. Now, let me use crash 1000 for example. If you look at a monthly time frame, you will discover that it has been on a bullish direction. Does that mean that we don't have sales opportunity? Of course, we do plenty sales opportunity. So you have to ignore monthly time frame. You really have to ignore the weekly time frame. You must ignore the daily time frame sometimes, because based on what I'm going to be sharing here, you don't necessarily need the daily time frame for you to make a decision. All right, except you understand what candlestick does, how a candlestick can initiate a change of trend using daily time frame. But in the absence of that, okay, what I'm going to share here will be enough, will just be enough. Okay, now the first thing is that use H1 time frame. I did not say H for now, and I have my reasons. I will tell you why. Use H1 time frame to check if the trend is bearish. To know that, that is to check if the trend is bearish. How do you know that the trend is bearish? Check if the candles, what I mean by candles, red, green candles, check if the red candles or the green candles are below the 48 SMA of color yellow. Okay, and also check if the candles are also trending below the EMA 22. Key point: check to see if the candles forming, all right, are actually below the 48 SMA. That is the yellow, a simple moving average. When that is established, you understand that okay, you are actually in a sell trend. You now begin to look out for entry opportunities. Okay, now why didn't I say H4? Now let me take you to the chart. All right, pray this will just show up because I have to off my data. Okay, now I don't want to be disturbed, that's why I'm putting on a plane. There are a lot of messages coming in, so I want this to be very smooth. If I come to H4 for an instance, you will discover that this thing has started dropping. okay? But the candlesticks, sorry, the yellow 48 is not even showing us any trend direction. It doesn't really make sense. Candles are just crossing in and out of it. And so if you want to wait for a clear, maybe it will work very well if you're trading V75 and V100, but we crash. If you use H4 to determine your daily trend, okay, sorry, to determine a major trend, you may be wasting, sorry, not a lot of your time. So what do? Come to H1. Now look at how it works with H1. Have you seen H1? Now what happens here is this. If you see, look at that yellow 48. All these candles are formed below the yellow 48, right? So it means it is actually a downtrend. From here, from this point to this point is a lot of money. It can make your monthly target if you know how to leverage. We'll talk about that later. But for now, let's go back. Now look at what happened as soon as, very carefully. However, I want to explain something here. As soon as the candle, cross over to this other side, just check what happened here. And the yellow crosses over the candle. One key point. The yellow crosses over the candle. The candles are above the 48 SMA. And then there is a cross of the red and the blue. Now, the red is the 10 EMA. The blue is the 22 EMA applied to a weighted close, right? Now, when that happens, I don't want this to be so clouded. First, look at, there is a cross. No, now. There is a cross of the red and the blue. As soon as that cross takes place on H1 or on a bigger time frame, maybe H4, in any indices at all, it's going to buy for long. That is true. Now, a second thing that must follow, the first thing you must observe, however, is that this would have crossed, telling you that the end of this sell trend here has come to an end, or this sell trend has come to an end. So a bullish trend is starting. And from here to here, if you were swinging it, is a lot of money. Now, how do you avoid this drop? We'll talk about it. I mean, this drop that just came down here. And will it continue? As we make progress, we will talk about it. So you use H1 to determine trend. Now, let me go back previously, and you see what happened here. You see that? Now look at this. Just follow me. Look at this cell here. When did this cell start? This is H1, remember? So look at this. As soon as this yellow crosses over the candle, there was a cross of the red and the blue here. After that time, go and check. Let's go slowly. Look at it. From that time, candles were not able to break through it. Every time a candle go towards touching it, or anywhere close to the 22 now, that is close to the blue EMA, it will drop back. So the blue EMA serves as end of retracement. I have said it in the other video. So which means you should place your sell in a sell trend as soon as it pulls back to touch the blue. From that period, it has been selling. Have you seen? Now I'm going to tell you something as we continue. Don't bother about this pullback. It is good. And then you continue selling, and you notice it's trending. I said one of the checklists, look at it. I said to know that, check if the candles are below the 48 SM of color yellow, and candles are also trending below the EMA 22. Now this EM 22 is the blue candle, blue moving average here. So you notice candles are trending below it. Now you ask, what if why it broke out of the 22? So what happens? Now I will tell you, if it broke out of the 22 and did not break out of the yellow, you see it touched the yellow. It did not break out of the yellow. It did not break out of the 55 pink. That is the purple. Is it purple or pink? I think it's purple. It did not break out of the purple 55 EMA. This one, I'm talking about this one. That's the purple that is very close to the yellow, right? It did not break out of that one. Then continue to hold that trade. Please, I'm begging you, continue to hold the trade. Now, remember, however, that it will not be wise for you to have sold maybe from here, from this point to this point, right? If it gets back here, you would have lost money between here and here. I'm sure you know. So you need to learn how to take your profit. I would show you how to know that there's going to be a pullback. There's going to be what? Let me not jump. Let me just tell you. As soon as you see this, look at the stochastic. You see that? I'm going to talk more about this when I do a video on how to buy crash. When you see the stochastic cross each other, it's going to pull back. You see that? Otherwise, like this one, this is this one here. Otherwise, it will continue to drop. And anytime it gets back to the top again, it will drop. But please, I want you to learn that. I think it's very easy. So don't quit your market until it breaks out of the yellow. There is a pullback candle, what I call a retest. Look at it. There is a red candle that retests that zone. When that happens, no, you don't have to sell again. The trend has changed for that period of time. Look at it. As soon as it crosses over the yellow, that is the candle crossing over the yellow, and then there is a cross of the red and the blue. Just know that you are no more selling, no matter what happens. Use H1. I didn't say H4. Then what you do is just start buying. If you want to buy, it will buy for a long time, and then how do you begin to look for sell? The same procedure or the same stuff occurs again. Now look at it. It crosses over again, and there is a cross of the red and the blue around that point, and after that period, it has been selling all over again. And then there was another cross and all that. This was actually a choppy market. What you do here is that you draw a square. You draw a square. You draw a square. How do you draw? You draw a square to find the choppy market because it's not really a trend. All right. When you draw a square, you look for support and resistance. That's how you trade that point, or you just stay away. But I'm showing us real stuff here. So please, that's what happens. And then there was a perfect cross here, and then it sold. It sold. There was another cross. It sold. Now I had to freeze this MT5 so that for the sake of this study, so that I will not be distracted. Otherwise, you'll be seeing a lot of messages, sometimes phone calls. So please just follow as it is. Okay, what I'm doing here will explain everything. That's the first checklist, right? Now, I said the first one, use H1 time frame to check if the trend is bearish. Why are you not using H4? Because H4, a trend can be bearish, all right, and the 48 SMA does not show, or the 48 SMA is above and the candles are below, but yet the trend is bearish. So don't use H4. Use H1. Now, I have said that. Number two, note in some cases, not number two, right? Note in some cases, the 48 SMA may be above on daily. That's why I'm saying don't use daily. But still, the trend is bearish. So work with H1 and H4 occasionally. H1 all the time and H4 occasionally. Why using H4 occasionally is in a situation where the trend is very strong bearish. It will reflect in H4. If, for example, crash sells very much, if I go to a C500, I will tell you what I'm talking about. If crash 500, like it has been selling for a long time, you will discover that, however, this condition will be reflected in H4. All right, you will notice that the yellow now will be above, and the candles under H4. I think, let me see if that can be done now. I just hope that this thing will show, because freezing. Okay, fine. Now let's go to H4. Okay, good. Now look at that, because this is a serious sell trend. That is why we have this man here. Okay, you see that? So all of this is a sell trend. All right. So how do you determine this trend? It's not that the yellow has crossed over unless you are swinging it. There are ways you can catch between here and here, between here and here, between here and here, all these moves. Okay, so but I'm trying to explain why I said H4 occasionally. Okay, because if you go to daily or weekly, you will notice that crash 500 has been on a bearish trend, not like C 1000. So let's go back, because I don't want this video to be very long. Number two condition: when the trend is determined, you've understood the trend of the market, that it is bearish based on the H1, parameter. Now, next is to check for pullbacks. I'm saying this very carefully. Check for what pullbacks. What we call pullbacks are like retracement, short retracement. Pullbacks using M5, M15, and M30. So let me go back to my C1000 and explain what I'm saying. First and foremost, you have discovered that that trend is a sell trend, right? The next thing you need to do is to come to M5. Now, what did I say about M5? When the trend is determined, next is to check for pullbacks using M5, M15, and M30 in case you miss the move. That is to say, if the thing has started dropping and you did not see it on time, you don't just, because it dropped, you now go and enter where it just ended. It will take you up a little and continue dropping. Well, for some people who have big accounts, it's not an issue. If the trend is truly bearish, it will still cover up. But what's the wisdom in taking a trade when you could have closed up the gap of that drawdown? All right, and why not take it at the top? What I mean is this: look at my chart. Now look at this. this trade has started moving. Don't just jump into that trade. If you check, this was a drop, wait for this pullback, it dropped. Don't just enter sell here, it will take you to this point. That's what I'm saying. For those who may not have, and if you check, this is 15 minutes pullback. Excuse me. 3 candles form before it dropped. 1 minute candle drop. Now you see the way it's going. You can avoid that. How do you avoid that? Come to 1 minute in this case. Look at what you're doing. As soon as it drop, wait for it to come back and touch the blue. The blue are called trigger points. Let it touch the blue. Like it came here. Don't worry. Let it, touch the blue. Go back and touch the blue, or it approach the blue. It will drop. As it goes towards the blue, it will drop. Now the same thing applies with the 5 minutes time frame. Anytime it gets closer to touch the blue, that blue is what we call end of pullback. That's where you make your entry in a trending crash sell. Now, what if the crash is not in the trend? However, the 22 also serves as what we call trigger point, meaning that every time a candle go towards the blue, maybe in 5 minutes or 15 minutes time frame, or even 30 minutes time frame, it's going to start another journey from that blue as soon as it touches the blue, or just a little above the blue. Okay, so having said that, let's come back to 5 minutes. So you see, that is what happens. So you don't just enter. Okay, for example, this thing that just dropped at this point, you now started selling. Well, you will have you will need to have a lot of patience anyways. Otherwise, it will take you back. You may be impatient. You close your trade. For those who have smaller equity, you don't have to do that. You have to wait for a pullback, provided you know that the sell trend has started. So wait for a pullback. The pullback will always come. Then you now enter and continue going down. So that is the second condition. When the trend is determined, next is to check for pullbacks using M5, M15 in case you miss it. Now for a re-entry, because you have already missed the flow, for a re-entry, make sure a selling crash pulls back. That's what I just said, to touch the 22 EMA color blue in M5 or M15. Why did I refer us to M1? M1 was because the crash was too much. You will not see it get to M5. Like, let me come back here. This is M5. You see, it did not pull back to touch the blue because of the way the thing was dropping. But you can use M1 to catch that pullback. To catch that pullback. Why is that important? Because check, if you were to count this green candle, this pullback candle, I'm talking about the buy candle now, I'm talking about this candle. If you were to count this candle, you will discover that each of that green candle represents 1 minute. Meaning, for this particular one I just took, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. You would have waited for 20 minutes before this drop came. Then another maybe 18 minutes before this drop comes. So why would you start selling from here and allow your trade to run for almost minus 20 minutes? All right, before you now have a drop, although the drop will cover up whatever loss you will have, but it's not wise. So that's why I said always look for a pullback, so that you have almost small pullback, just small negative, and then it comes with that. Okay, so that's it. And secondly, for those who want to catch the drops, make sure that you are placing your sell as soon as it touches the blue or it touches the 55 pink EMA. We'll talk more about that. Now that's that. For a re-entry, make sure a selling crash pulls back to touch the 22 EMA color blue in M5 or M15. Then place a sell and allow it to run. When I said allow it to run, remember, this is, you are trading like a pattern. You're not trading the spikes or the drops. You're allowing it to run. For example, it may drop and give you $50 profit or even $500 profit. Now, what does it do? You don't have to close the trade except it has hit your target, right? It will pull back and can even subtract your $500 to 400 to even 300. Then another drop will take you to 750. It will pull you back again and take you back to 500. Another drop will take you to 1002. Just like that, going until you get to where you have to exit. That's how you trade it. That's how we trade. That's the best way to trade it. Except you just want to catch the spike, close it, wait for a pullback, catch the spike, close it, wait for a pullback. It is stressful. For me, well, you may make a lot of money, but you can also make some mistake. So trade it as any other indices. Now, what did I say here? I said note, sometimes the pullback may go as high as touching the 55 EMA. That is to say, it can get to the 22 and will not crash. Don't worry, it has not changed the trend. In M5, M15 or M30, you can check M15, it touches the 22, it will not crash. You go to M30, it touches the 22, it will not crash. Don't worry, it is still a sell trend. Sometimes even H1, by this time you have a good drawdown, but don't bother, provided you have a good equity, you did not over leverage. That will say you did not use an extreme lot size. Don't close your positions except the pullback breaks above the 48 SMA on H1. Now let me go to H1. Now let's assume that we are selling from here. It has been selling. This was a pullback. It drops again. This is a pullback. Now it got to this 22. It did not drop, right? Remember that, however, it's not bad for you to take your profit at each point, like I told you. And also, you can take your profit from here to here. Wait for this to continue, this pullback to finish. Enter again from this point. It drops. You can even buy and sell. Me, I do buy and sell. I buy, I do, whether in a bullish or I do the buy and sell, but don't do that. Just look out for the sell opportunity. I'm going to do another video, God helping me, on how to buy crash alone, okay, or not to sell boom. So what I'm trying to explain here, so that I don't mix things up, is that you can only quit this market, like I had explained earlier, when the candles have form and close above the 48 SMA in H1. Take note of the time frame in H1, not in 30 minutes, not in 50 minutes, but in H1, because when it closes above when the candles closes above the 48 in H1, it means it is truly a strong momentum, that for a while it is going to buy, maybe continue to sell later. So you have to quit your position and think of maybe another direction. Okay, so that is that. Now, to further confirm your decision, that is for sell, that is to sell crash. To further confirm your decision, check if there is a cross of 22 EMA blue and the 10 EMA red in M5, M15, and maybe M30. Now, I had said that before. Let's go to M5. You want to sell, right? The first thing is that there was a cross. All right, if you check my screen, there was a cross of the blue, so definitely there's going to be a sell, no problem. It went up again. Now, there cannot be a cross in M15 if there was no cross in M5. I want to say that again. There can't be a cross in M15 if there was no cross in M5. There can't be a cross in M30 if there was no cross in M15. There can't be a cross in H1 if there was no cross in M30. There can't be a cross in H4 if you didn't first see the cross in H1. So now the point is, the bigger the time frame where you spot the cross, the longer the sell in that direction. So now look at this. Let me take us back to this point. Now look at this. There was another cross. Take note, this is 5 minutes, right? We have seen a cross in 5 minutes. That is the blue crossing over the red, right? And sometimes even the yellow also cross. This is immaterial. We just want the blue and the red to cross each other. Then you see this drop. This drop is a lot of money. Wow, what it means for me. Anyway, now that is that. Okay. Now come to M15. That cross will still happen. This thing is very simple to the core. You see that cross happens. Now this thing is going to drag to this. This is what I said. So if you're using M15, you always spot this man. This man is the 22. Sorry, the 200 EMA. This should be your exit until it breaks it. Now look at it. There was a cross in M15. Let's see if there was a cross in M30. The cross in M30 is yet to happen. Now, if the cross in M30 happens, please don't miss this point. It is going to sell. Your TP is not going to be. Now let's go back for a moment. This is M15, and I said your TP will be here. Always look at this position for your TP. Okay. Now this is 130.35. This should be your most safest TP. If you're using M15 cross, it means it's going to sell to 130.35. That is the price, right? But if you now come to M30 and a cross takes place, your TP will not be 130.35, because the 130.35 is the TP for M15. Your TP will now be the next 22. They are almost close, which will be 130.26. The initial TP was 130.35. The next one will be 130.26. If we continue to make progress and it keeps selling and we come to H1 and a cross takes place, your TP would have gone below this point. All right. But however, place your TP anywhere at the 200 EMA, because the 200 EMA serves as support and resistance. In this case, it will serve as a support. When it gets to that support, there's going to be some consolidation. Maybe if it breaks the support, we can begin to look at a new TP. If it doesn't break, which most of the cases, or most of the time it doesn't break, it begins to go back up again. All right, that's the way a crash works. Okay, so I don't want to miss the point. So let's go back. Now let's go back to where we were. So that's it. That's it. I said to further confirm your decision to sell, check if there is a cross of 22 EMA and that. Okay, so you can decide to catch a good long spike if this cross takes place in M5 and M15 as I'm going forward. Note, a cross can't occur in M15 if it didn't first cross in M5. I think at that point is very clear. Excuse me. And I said, note, the higher the time frame where the cross of the EMS occurs, the longer the sell of the crash. I think I have showed that to us now, that if it is the M15, the TP zone will not be as longer as the cross in M30 will be. Now, number 4, apart from using the above, what we have just explained so far, if you see a regular bearish divergence on M15 around M15 around, meaning that crash is creating higher highs, that is the chart, the candlesticks are creating higher highs and the oscillator is creating lower highs. Wait for crash to pull back up to almost the last high of the bullish candle in the time frame where the divergence was spotted, then sell from there. What it means is, in every divergence spotting, let us assume that this was a divergence, although it's not a very clear example. Price was making higher high, assuming, okay, that was it, and then the oscillator is making lower high. That's what it means. That's a divergence. Okay, this is typically a divergence. What it means is that as soon as you spot this, wait for before you sell, wait for a pullback that will touch almost, this is the pullback. Now watch where I place this thing. You see that last bearish candle? Look at what I said. I said wait for crash, that is the crash now, to pull back, that is to buy back up to almost the last high of the bullish candle in the time frame where the divergence was spotted. In this case, I would say M15 we spotted it. So the last bullish candle was the last high of the bullish candle is this candle here. So that they said start selling from there. You know, if you start selling from there, you would have started catching this drop from this point. Just a little pushback, then you would have. This is actually a divergence situation. This is a clear divergence. What is showing up here is a clear price is making higher highs. So, and then the oscillator is making lower high. This is divergence. So in the absence of all the things I have explained, you can use divergence to trade crash, and use a regular bullish divergence to trade bullish. That is to trade boom. That is to buy boom. Okay. So we're working on the checklist. What you need to check gradually before you take a trade. Don't just jump into the market because you see crash is selling or boom is buying. There are positions where you will get into and you get trapped. Okay. Number 5, another key thing to consider before you sell is to be sure that your stochastic of 531 is at 90 and the orange color line is almost crossing over the green line around the 90 oversold zone. Use M5 to check before you place the sell. Well, this is important, but when I say key thing is because okay, let's come to M5. Before we took this sell, this is what it's saying. Excuse me, please, just follow me closely. Before we took this sell, what it means is before this sell was taken, another key thing you need to consider, it's not as if it's part of what you need to check, is to check if the stochastic, look at, I just crossed it, if the orange color and the green has crossed each other. This is what this represents here. So if that happened with all other conditions were met, take note there was also a cross around here and all of that, then this also happened. This is a double confirmation. Just close your eye and sell it, and don't worry, it will flow for you. Okay, it is very simple. In fact, to be frank, crash boom is the most easiest of all indices to trade, the easiest of them all, because it has a principle that over time has been respected, a pattern that has been respected and has not been compromised. Although sometimes if you don't follow these things, you can be trapped. So we're going to talk about exits. How do we exit these stops? Okay, so let's go back to what we're saying. So now do this in the opposite for buying boom. Everything I've explained here, do exactly the opposite for boom. So I may not have the time to go through the boom stuff, okay? But everything I've said, you want to buy boom, look for regular bullish divergence. In crash sale, we're looking for regular bearish divergence. All right, in boom, we're looking for regular bullish divergence where price is making lower low. Sorry, the candles are making lower low and the oscillator is making higher low, lower low on the charts, and then the oscillator is making higher low. Key thing. Then you wait for a retest of the trend line. I will not be able to draw that, but please read up for divergence and ask questions. And then everything I've said, just do the opposite for boom. and they see the same principle. The same crosses appears the same way. It just like turning your phone upside down. Okay, so that is that we are done with crash. Now for exit, a selling crash will come to an end when the bullish candle breaks above the 48 SMA in H1. That's what I'm saying. Don't quit until I have showed that to us, until the candle breaks above, that it crosses the 48 in H1, not in 30 minutes, not in M15, and the 22 EMA and the 10 also crosses each other in H1, and the candles are above the crosses, that is signifying the beginning of a buy move. Let's come to H1. Look at what I'm saying. What that point I just explained is this place. There's a cross, the candles are above now, and then this also passes, so this becomes a bullish situation. That's what I just explained now. That's when you exit. That is if you were selling from the topmost top from here and you have been holding your position. As soon as this happens, you close. But I don't know why somebody will have to hold their trade this long before it happens. Anyway, I will show you what to do so that you can also take advantage of these buys and all that. Anyway, that will be in the next video. Now, secondly, exit your trade based on your target. Why a lot of people get trapped and they get, my account is blown, this is happening to me, I don't know what is going on, is because they trade just anyhow. You must have a target, no matter what it is. No matter how good you are, you must have a target. Okay, every day I'm looking at making this amount in a week and all that. So when you hit your target, you will not have trouble. Just leave. Okay, no matter how good the market opportunity is, leave. All right, I know a lot of people will just hear, they will not take it. It's not easy. Greed factor is one factor that man will have to fight with the rest of his life before he can finally overcome it. So that's it. Now another thing is, based on your target, or when crash sales approaches the 200 EMA, 200 EMA, that is what I was explaining. If you come to M15, as it approaches the 200 EMA, that is where you have, that's when that's the exit. That's what I was explaining. That's what that checklist is saying. That's for exit. That's where you close your trade, or in H1, depending on the time frame of decision. That's to say, if you're using 30 minutes, look out for the 200 EMA. If you're using H1, look out for the 200 EMA. Those are your exit points. Now, PS. Okay. Postscript. Always spot resistance zones and draw them. Those are zones where sales or crash will likely begin. Don't just start. This is for people who understand price action. Look out for resistance zones. Mark them. What I do is that in my own chart, I will mark those zones. And for those of you who have said it before, you can go and read about other block, that is IOF, institutional order flow. It will help you to be able to distinguish between normal resistance and demand and supply zone. So those are important because those are areas where crashes begins to take place. Okay, support zones will initiate the buy in boom. The opposite is for support is for boom, its resistance are for crash sales. To catch the drops or spike. Now, this one is just to catch the drops. You are not concerned about the pattern. You just want to catch the spikes, catch the drops and all that. Having known the major trend, which is also a factor anyway, a spike or drop will 95% of the time occurs when it approaches or touches the 22 EMA blue or the 55 EMA pink. I have said it before and I'm saying it now. Now look at what I'm saying. Coming back to 5 minutes, every time, Lord help, every time you notice, what I'm saying is, every time, okay, maybe let me use 15 minutes. I need a sell trend. Okay. Now look at this. Every time you just want to catch the drops, just be looking at the blue. Just be looking at the blue 22 EMA. Every time, you can even use 1 minute. 1 minute can also make it easy for you. Let's just say every time it touches the blue, you just want to catch a spike, just place your sell. They use a good lot, it will drop. You close. Wait for it to pull back and touch the blue. You place a good trade there, it drops. Just like that. That is for those who want to trade spike. You don't really have a pattern. That's not trading for me. But I just had to put that up here. And when a crash index buys back to touch the 22 EMA, that's what I just explained. When it is still downtrend, however, load up the sells at that point while also placing your eyes on the stochastic. If the both lines are approaching the 90 level zone, what I mean is that, look at this. I need to explain that, but this is going to be very sweet. As it approaches this place, look at your stochastic. The green and the orange color are at 90 zone, so you have a drop. All right, every time this happens, you will notice that the both of them are almost at the top, so they work concurrently, they work together. So that's the approach. Now that was that. Okay, so let's go back to finish up. Oh dear. Now, okay. Note, to catch massive drops of crashes or boom buys, squeeze your chart to zoom one level. And when the 5 EMA in RSI1 window touches the 90 level of the RSI in a downtrend, it means the pullback is over. Load your sales and allow it to drop. Well, this one is the last part of it, and this is what I mean. You squeeze your screen, right? All right. You squeeze your screen, and this is what it means. In a bearish market, however, if there is a pullback, look at what I mean. This is one level. Anytime this blue thing you see here, this blue moving average is 5 exponential in RSI window 1. Every time you see it come to touch this zone, just load. What I do is that I load it up, but you need to have a little patience. If you load it up, it will drop just like that. Now let us go back and look at it. Look at it. I'm going to push back. Every time it gets to that touching the 90 zone, it will drop, it drop. But remember, this thing changes as you pushes it going forward. It also changes direction. But if you allow your chart to be, now let me go to maybe something else so that you see that it works in every of boom and crash, right? You just have to squeeze your screen to the last and to the barest minimum. Okay, fine. Now look at it. As soon as this is squeezed already, you see. Now this is room level 1. This is 2, 3, 4, 5. Now I'm talking about 1. What you do is look at this place. As soon as it touches this zone, the blue touches that zone here. This is what will happen. Just load your cells on top as soon as you see this touching here. Now let me show you one amazing stuff as well. Let's go to M15. Okay, now look at M15. Every time, the bigger the time frame, the massive the drop. Let me use crash 1000 to explain. This is just an addition to what is very most important. Now look at this. This is squeezed, and this is M15 minutes time frame. I have squeezed my screen to level 1 zoom level, and now look at what happened. You see that? It has touched the 90. We call that point exhaustion point. This point is called exhaustion point. That is, it cannot go further anymore. It must release, it must drop so that it can create momentum to continue to buy. That is if it wants to continue buying. But as soon as it touches, it must drop before it continues, right? So here you can load up the sales. But what I'm saying is that make sure that this is actually a pullback of the major trend. The major trend is bearish, but what you're seeing here is a pullback. Then you can load this up and be rest assured that you will see yourself in blues. And so that is the checklist for trading crash and boom. Apply the same principle with boom. If you have question, drop it on the comments, the comment section. All right, watch the video and drop it on the comment section. Finally, repeat the opposite of this for boom. We didn't really talk about boom, but exactly the same thing for boom. Whatever I've said in crash, apply the same in boom, the opposite direction. All right, it will work for you. I pray for you that you will succeed. All right, I want to use this opportunity to appreciate my very beloved mentor, Pastor Papa Jimmy, for the opportunity to share this. And for those of you who think of giving up, this is not the time. Do more of learning. Learn, unlearn, relearn. Don't give up. Stay on an asset, gain mastery repeatedly. Don't just jump into live trading because you are having some great results in your demo for maybe 3 days or 4 days. Take your time. Make sure that it gets into your subconscious mind. Even in your dream world, you know what you're doing when you come on live. I didn't see it's going to be 100% all the time. At times you will lose trade. I lose trade too. But then with consistency, not giving up, God will help all of us. Thank you very much for paying attention and for listening to this video. God bless you.